This video sponsored by BuyMote.
If you're watching this video, consider yourself very lucky. Today, we're diving into an incredible gold trading strategy using Bollinger Bands combined with the power of Lux Algo. This is your chance to learn a method that not only pinpoints profitable setups, but also minimizes false entries. Here's the plan. We'll use Bollinger Bands to identify the perfect setup. And for entry confirmation, we'll rely on one of the most accurate indicators available on TradingView. Let's get started. If you're excited about this strategy, don't forget to leave a like. By the way, to ensure this strategy is both reliable and worth your time, I've tested it 100 times, and the results were truly impressive. Stick around until the end of this video where I'll share a breakdown of my trading results. To get started, we need to set up our indicators on TradingView, the platform I'll be using for this strategy. First, load the trading security you want to work with. While I'll be demonstrating this on the 15-minute time frame for gold, I've tested this strategy on high-volume cryptocurrencies as well, and it works just as effectively. For time frames, I recommend using the 5-minute, 15-minute, or even the hourly time frame, as these have shown excellent results in my testing. Now let's add the indicators to our chart. First, click on Indicators, search for Bollinger Bands, and select the one listed under the Technical section. For the settings, we'll stick to the default configuration. If you'd like to customize the style, here's what I use. White for the basis, red for the upper band, green for the lower band, and I disable the background option for better visibility. Before we move on to adding the second indicator, it's important to understand how we'll use the Bollinger Bands to build this highly profitable trading strategy. For this strategy, we're only focusing on buy trades, no sell trades here. To make things easier, I've created a cheat sheet for you. Feel free to take a screenshot and use it as a quick reference when spotting entries. Now, I know this might seem a bit complex at first, but trust me, it's much simpler than it looks. Once you practice and get the hang of it, you'll be amazed at how straightforward it becomes to identify this setup right on your chart. Let's start with rule number 3. This rule focuses on identifying candles interacting with the middle band. Look for a candle that either crosses below the middle band with a strong bearish close or fully positions itself beneath it. Alternatively, if the price bounces off the middle band, at least one bearish candle is needed as confirmation. Important to note, if no candles make contact with the middle band, the setup becomes invalid. Rule number 2 is all about identifying candles crossing the lower Bollinger Band. Look for a candle where the body or wick has crossed below the band by 50% or more, or a candle that is closed beneath it. If you're unsure, the Fibonacci tool can help. Here's an example. In this case, the wick appears to cross below the lower band, but is it 50% or more? To confirm, use the Fibonacci tool. Draw a retracement from the body to the wick like this. Adjust the settings and coordinates, and you'll see if the crossing meets the 50% threshold. Now let's take a look at rule number 1. Search for a candle that is touched, crossed, or closed above the upper Bollinger Band. Once all the conditions are met, rule number 3 confirms the candle bouncing off the middle band, rule number 2 confirms the candle bouncing off the lower band, and rule number 1 confirms the candle touching or crossing the upper band. We can move to the exciting part.